Hi, I'm Naresh Abhesekara and welcome to our very first Digital CFO series. The Digital CFO series is a joint initiative between SLASCOM, which is the industry chamber representing the IT and BPO companies in the country. The IT and BPO industry currently is growing at about 300% plus, which is the fastest growing industry in Sri Lanka, as well as it adds about 90% value addition to the country. So it is, from a skill set basis, it is the higher skill sets that brings in the export revenue to Sri Lanka. And as you all know, ReadMe is the most popular IT magazine in Sri Lanka. So the purpose of the Digital CFO series is where we want to educate all finance professionals of what is happening in the world of digital and the digital disruption and innovation that is taking place, as well as the technical frameworks and standards governing our industry in terms of financial reporting and how we can market our industry in industry's business reporting framework. So today we are going to focus on the changes that are happening in the International Financial Reporting Framework. Now, the International Financial Reporting Framework is critical for our industry because we cater to the international audience, which is mainly clients overseas, who are some of them are Fortune 500 companies. So the financial statements per se is a marketing document for our companies. And it's very important that we market our financial statements in a common language that the whole world understands. And that's why we have an expert today with us, who is none other than Manil Jayasinghe, who is a senior partner at Ernst & Young, who specializes in international financial reporting standards and its application, and he heads the technical practice of Sri Lanka for Ernst & Young. So welcome Manil for this discussion series. And just to begin our discussion, Manil, I would like to get your view as to why it is important for Sri Lankan IT and BPO companies to adopt international reporting standards, especially when communicating to the global community what their business capabilities are.
Thank you, Naresh. And it's very important that you brought this point out. Financial reporting really is a mechanism where you are able to tell your story to the market. In your industry, this becomes critical because you are going into markets which probably who the markets don't really know you. So given that you don't know, the market doesn't know you, it is important that you find a mechanism where you can tell your story and the market can accept the story. So financial reporting is a mechanism which can be used to do that. Now, when you try to tell a story and when another person is trying to understand you through what you're saying, it is important to use a language which is understood by everyone. So therefore, the financial reporting standards come that will ensure that there is consistency in the message that you are trying to give and the message that the reader understands. If you don't have that consistency, you might give one message and the reader might understand it in a different light.
Yeah, so basically what you're saying, Manil, is even if you take, let's say, London to US to Japan, if we look at the revenue recognition framework, if they do it the same way consistently in all the countries, yes, that gives more credibility to the financial statements, exactly, right? As well as they don't need to dig deep to understand how you have applied it, exactly. And especially if they are the top 3 or top 4 auditor certifying it, it will certify that your financial statements are solid and gives the same story of any other financial statement that they have seen in the same industry anywhere in the world.
That's right.
So I think that is basically a very big edge that we need to have, and it's important in selling companies, whether it's whether it's basically investor or potential investor or even exit.
Actually, selling company is one part of it. Even when you're selling a product, I'm sure when you go and try to sell a product, the buyer will want to know the stability of your company. Because they will want to know the stability of supply. Can you continue to maintain this? Do you have the necessary resources to deliver on the goods? So all that, the primary source for all that information is the financial statements.
Definitely.
So whether it's a buyer or whether you're trying to sell your company or whether you're trying to buy some other company, your primary source of information is the financial statements.
Definitely. I think in my experience, even though you're shortlisted, the next thing that they look at is they basically ask for your financials.
Yes.
And then they dig deep inside
Exactly.
the financials and understand it to see if there's annualized growth which is consistent and your profitability is consistent. And applying a consistent framework to account for it also is helpful.
It becomes a prerequisite, because otherwise what happens is a person has to reconcile between what they understand as accounting and what someone else is presenting to them. So if you have a consistent framework and a global framework, that problem doesn't arise, because everyone knows this is the basis on which it is prepared, and the person who's reading it is able to understand because they understand the basis on which it has been prepared. So that's why a globally consistent financial reporting framework is necessary.
Okay. Now, just to look at another perspective, now one of the initiatives that we are looking at, Manin, is to build the startup community to about 1,000 new startups by 2022. And in this process, we have various incubation mechanisms and where these startups can pitch to international investors. Now, if you look at three avenues there, one is you have the startups. Second, you have basically existing a bit mature businesses seeking more investment.
Right.
Or the third is where you have businesses wanting to exit.
Right.
In these three dimensions, what do you see to be the benefit, especially starting from investor pitch, the application of IFRS from day one, whether it's revenue recognition, whether it's product capitalization or any other concept? What benefit do you see
See, initially,
from business point of
yes,
view?
when you're a startup and you're seeking capital, clearly you have to convince the investors that the what you have is a good idea and it's a workable and a commercially viable proposition. Now, how do you prove that to the investor? I mean, I can go and do a big talk and try to convince the investor, but the investor also will like to see whether the investment that he's putting in is going to get the desired results or the desired returns. Now, one way of showing that is through financial statements or financial numbers. Now, here again, if you don't apply a consistent financial reporting framework and do not apply those principles, you may produce numbers to the investor. Subsequently, when the actual financial statements are presented, they may vary from the original presentation of the facts and figures. So for a startup, it is important to, when they are presenting their business case for an investor as to why the investor should really put their money into this venture. Again, you have to give them the information so that they can make a decision, which also should be based on some common financial reporting framework. Now, if you don't do that, one of the problems that you will face is that the investor will want a higher return to compensate for the inconsistency in those reports. So, which means you're going to either get those at a higher cost, or you may shy away certain investors who potentially could have invested.
Yeah, I think from what you said, the main reason could be the fact that you might have won the contracts, but the terms of how you negotiated those contracts might not lead to showing consistent annual growth.
Yes.
Right? So there, I mean, you have won the contracts, but when you present in the financial statement seeking investment, right? I mean, you haven't looked at how the accounting takes place. So your consistent growth in terms of revenue and profitability is not reflected in those numbers.
Exactly.
So it's very important that even the startups early on plan to apply the common international language to sell their companies and market their financial statements and their companies.
Yes. So then, when the investors see, there isn't a big difference between what was promised to them and what you have actually achieved. I mean, in terms of reporting, that consistency will be brought. For a company who's already in existence, there are several benefits. As I told you, when it tries to procure new contracts, I'm sure your customers, at the end of the day, look at the stability of this entity. So the financial statements will reflect how good or bad or whatever the case may be, of that company. The physical strength of that company will be reflected in the financial statements. In addition to that, you are also now seeking additional investments. So what I said earlier still applies. In procuring additional investors, the investors will want to know what has happened in the past. So your historical performance is reflected in your financial statements. So therefore, it is vital that you use a framework which is easily understood by your investors and which is consistent. At the end of the day, both parties either sending the message and receiving the message, they receive the same thing. They understand the same thing.
While you're saying that, Malil, one of the thoughts that crossed my mind is the fact that, okay, when a startup starts, the last thing in the priority is the auditor or getting the accounts audited or application of financial reporting, right? Because they just want to get the product out there, get the technology out there and sell. But in the same process, right, from the entrepreneurship forum point of view, we are trying to negotiate with the key big audit firms how the startups can basically start with a top 3 auditor. Because if you have a big 4 or a big 3 stamp on your financial statement, those financial statements are sellable anywhere in the world.
Yeah.
In your way, what is you're on a big network. You all have representation in all countries, whether it's Ernst & Young or any other top 3 or 4 audit firm. What is the main value and the benefit that you could bring to a startup by being the auditor?
So one is a credibility factor. See, when the reader tries to understand your numbers, first of all, it's the management who is preparing these numbers or presenting this financial information. Now, reader needs to get comfort that this information that is presented is free from any bias. So it needs to get stamped to say that this is a position that you are reflecting is at the actual true position. Now, in doing that, when you try to stamp that, the person who is stamping it needs to be recognized by the reader as well. Yes. To add the credibility. So if that person is not recognized, then the reader will say, okay, this guy is not known. We need to add some premium for that unknown factor. So going with an international firm who is recognized in the market adds that level of credibility. Once again, reducing the risks that the potential reader attaches to the credibility of that information.
Okay.
So that is where it helps. In addition to that, because you're in global networks, the global networks are able to bring to the local entity the expertise which they have gained throughout the network. So in your industry, which is a specialized industry, it is important to understand the subtle differences in your industry that can result in different types of reporting, different types of presenting information. So if you don't understand that, those subtleties, sometimes what is presented may not necessarily reflect the right picture. So that's the benefit of a global network.
Can it also result in alliances? I mean, where the auditor facilitates maybe investors coming in. I mean, if they come across similar companies operating in 2 different countries, I mean, putting them together or things like that.
Yes, it definitely does. Because of the fact that you have a global reach, there are different. We are servicing different types of companies. The benefit of that can also come into play.